What's up, everybody? Michael Silva here. In today's video, I'm going to give you my thoughts on this current market. Got some good, interesting insights. We're going to dive into Tesla too as well. You're watching the Stock Market Brief Show. We're going to get right into it today. It's going to be a short and sweet little episode. Now, price hasn't gone anywhere since November 10th. Really, November 10th, we had this big move up. We had up, up, down, up, down, down, up, down. That is some choppy price action, and it sounded like a cheat code to a Nintendo game. Now, if we take a look at where price is and we just go to the left, oh, what do you know? We're basically right exactly where we were at the close of business November 10th, and today is November 21st. Now, there's going to be people that look at this and see a bunch of different things. They're going to look at this. They're going to be like, hey, we're flagging right now. That's what's going on. We got this high to down here and boom, boom. And we have these and boom, boom. It's like flagging. And we're going to discuss that and where I believe price action could go. We're in a very precarious place because, as you know, if you've watched the episode prior to this and the one before, there's a lot of things showing, just flashing red. There's warning signals of overextensions. But we're coming into a bullish period in time, right? We typically have a nice rally this Thanksgiving week, albeit it's a very illiquid market and it could be choppy, which we saw today. And you could see that in, the 11 sectors here that make up the S&P 500. What I want to point out here is look at the top. This is very defensive position. You have consumer staples, you got real estate, you got utilities. The only one that wasn't up there was healthcare, but it's still in the green. Okay, so you have a very defensive posturing right now into this Monday. Now, if you look across the board here, what did the index products do? They're down, including VIX. I swear this correlation on the VIX has been very, very interesting. There's just something odd going on in the markets overall. And when there's something odd and you don't have a really good grasp on where price can go or a very good risk to reward, and you can see that in price, what do? Well, you lower positioning sizing, you take it easy, and that's just how it is. Now, interestingly enough, I want to point out a couple of things. Consumer discretionary down here, XLY. Okay, you're talking the three big horsemen here in the S&P 500, the big sectors: consumer discretionary, financials, and tech. So when you have tech down and you have consumer discretionary down, it's going to be very hard for the S&P 500 to do well. Okay, now financials really is what held things together today, in my opinion, at least, because consumer staples, real estate, like that's not going to really hold the market together. Financials being in the green is a monster, and that is what held. Now, even energy is another big component, and you have some very, like Chevron, you have just some big names that increase market cap over the years, and even out, took in the top 10 of the S&P 500, where you had like Meta before, and now got booted down as far as market cap goes. Now, if we take a look a little bit deeper, we'll look at the heat map. The heat map shows what? It shows the big mega cap stocks kind of got hit today. Apple, Google, and then Tesla. Tesla was the big one, so down 6.84%. So that's going to freak a lot of people out, rightfully so. Why? Well, because it has been going down significantly, 1, 2, 3, 4, 5 trading days in a row. Now, I was looking at this back when over here at this little wedge pattern. We broke down, we wedged again, and now we're breaking down. But this, to me, is actually kind of interesting. And the reason why, and I shared this earlier in the day with my Patreon group, is that Tesla's kind of wedging right here on the 15-minute time frame, albeit it's getting really beat up. But another thing that I want to call out is it's actually at its lower weekly expected move on day 1 of the week. Now, this is interesting because they can still have 2 sigma moves, but if Tesla is going to hold at this lower weekly expected move or maybe bounce from it, this could very well help with sustaining the S&P 500, or at least consumer discretionary, which is a big component of the S&P 500, meaning that the downside could be somewhat limited if this holds together. So what we got going on now on this smaller time frame, we have a little bit of a positive divergence, right? RSI is a low, and then we have a higher low, whereas price action's a lower low, and then you have the PMO kind of crossing over right here too as well. Maybe momentum's going to change, still below 0. It's still a lot of risk, okay? But yes, so we're getting outside of the weekly expected move. It makes potential sense to look at this saying, hey, if this bounces, in Tesla, it's deeply connected to other high market cap stocks, the market may actually be able to bounce from these current levels. It's a possibility. Now, if I look more specifically at the sector too is actually interesting. This is consumer discretionary, right? Home Depot is holding up kind of well right now, surprisingly too as well. You have a positive divergence. You have a high, and then a higher high, a low to a higher low, and then you have another low to a higher low where price action is putting in lower lows, and you can see price goes up, expands, and then contracts. You can see that price is kind of coiling up, which means we're going to have a boom, break to the downside, or a boom, break to the upside probably here momentarily. Another big one to watch is obviously Apple. Now, Apple got hit 2.7% on the day. Now, it's not too far off its weekly expected move, so it looks like it could potentially break from this little bear flag and come tag that area. However, if it does recoup that 5-day moving average and start moving up, well, that opens the door for this potentially just being a big flag, and we start heading up to this upper weekly expected move. So we'd want to see price action obviously get back above that 5-day moving average. It's kind of curling itself over. We're in a short-term bearish, flag here. And if we do come down though, like say tomorrow, that could, the S&P 500, or sorry, the Apple product is the biggest component in the S&P 500. So if this stops pause and it just bounces around this area, that can very well kind of hold the S&P 500 from having any dramatic sell side for the remainder of the week. It's a possibility, and those are kind of just my thoughts right now. Now, in previous videos, I've been talking about the BP-SPX chart. We still have a negative divergence. We have a high to a higher high, and then we have a high to a lower high. So this does look, it's a very, just like I said, interesting place to be. Very hard to handicap sort of risk right now. If we take a look at a couple of the summation index, the NASDAQ summation index does look like it is starting to curl itself over, but it is still below zero, and it's still above that parabolic SAR. We've been talking about the negative divergence right here on the NASDAQ McClellan oscillator, and we're still waiting for that tick over to potentially identify a trend back to the downside. Now, and then, we talked about that on the 2018 kind of matchup video. The NYSE summation index still showing strength. It's getting above zero. It's been a while since it's been above zero. When it crossed above, it was over here. And we had what? We had some further upside in the market before eventually it turned over, and then we started going back down. So we're going to wait for this parabolic SAR to see what it does, see if this starts turning back around under through zero. We do have that negative divergence that is still kind of holding together. So we'll see here if this is just a little consolidation before we start breaking out further. You got to be open to that idea, at least if you are bullish, and you got to be open to the bearish side of things. Now, if you look at the daily time frame for the S&P 500, you have the histogram curling over, the MACD curling over, and you have a negative divergence on the histogram. I know people are going to look at this and be like, hey, it's potentially a bull flag. Cool, yes, but it also can be a potential head and shoulders. What do you mean, Mike? Well, you have a left shoulder here, you have a head potentially building out, and even if it were to pop up here, you can still be building out a potential right shoulder, and then you get cracked the neckline and you go right back down to the lower trend line. Okay, you got to understand that this is still a downtrend. You have a series of lower highs, boom, 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 and lower lows, boom, boom, boom. Okay, so yes, we have negative divergence building. Price actions, what I find interesting here is you saw this kind of, big boom in volume, right? We kind of moved up on that, bam, and now volume is contracting, rightfully so. It's a holiday week, and while that's contracting, it's kind of consolidating nicely. We talked about this actually, I think on this day over here, when we started saying, this is where I'm going to start looking into building into short positions. I have some various short positions on against some long positions. Like I said, right now, I don't have a very strict direction of the market. So, it just is what it is. The market isn't trending right now, unfortunately. On the longer time frame, it's to the downside, but you know what I mean? In these last week or so, it's just choppy. So as it stands right now, we are currently, yes, that flag, can scare some shorts. So if we boost up, right, if we start moving up higher, we're still within this bearish structure, right, overall downtrend. But you got to understand that would bring in a lot of FOMO, and if we're following the same script of 2018 as how the Fed is raising rates, right? There's some interesting talk about that today, how the terminal rate may be lower, and the market kind of did all this kind of crazy stuff today because of it. But they're tightening, they're raising rates. It's very similar to 2018, so it leaves the opportunity for a potential liquidity crunch here coming into the end of the year or potentially early next year. Now, if we take a look at the SPY on the 15-minute time frame, we are contracting, right? We're contracting here. You can see price action is getting very, very tight. So you have price action currently trading underneath the 5-day moving average. So what you want to do is you want to just look right here, boom, about 397.50. If we start breaking above that, that can open the door to go to tack to around 402.50. That would be the bullish case scenario. But you got to understand, if it starts cracking down from this, right? If it starts cracking down from that, it can open the door to here around 387.50, which is the lower weekly expected move. I've been watching this on a 5-minute time frame. I've been looking at this broadening wedge type pattern right here. So it's like this move down and then you're broadening out. We broke down from it today and we started moving back up into it, came back down, and now we're coming up a little bit. So this could very well just be setting up for a measured move down to the lower weekly expected move, but you got to be open for other possibilities. And the other possibility here is that this is coiling up and then we get a break out of this little pattern and it goes and it tries to get for the upper weekly expected move. Another thing that I want to point out is the Qs. Qs is back in the chop box. Not too far off the lower weekly expected move. If Apple gets cracked and if Tesla continues to go down, yeah, this is going to probably get cracked and then start heading to that lower weekly expected move. But still, even if it does do that, look at the structure that it's in. Could be a big bull pennant, bull flag that's forming, and this thing could take off. So, there are bullish things potentially taking place, but you got to look at all the signal charts, right? And those are like the BP charts, and then look at market breadth that's kind of curling over. So this could be just setting up for just a massive bull trap. It could be all a big fake out. So as price continues and we get more data, we're going to interpret it and see if there's any more clear possibilities. As it stands right now, in the short case, we're below a 5-day moving average on not only the Qs, we're on the SPYs, okay, and the IWM over here. So in short term, it's bearish. So even in the long term, it's bearish. So the bears have control. What do you need to feel a little bit more confident to be short-term bull? You want to get above these 5-day moving averages, both on the SPY, on the Qs, and then also the IWM. So really quickly, I will touch on the zones and my Patreon, but before I do that, I'll talk about the zones. We talked at the very beginning about these being defensive sectors, right? Consumer staples, utilities, and healthcare, right? So those are defensive names. And what I'm seeing here in the zones is look at the red XLV, okay, boom, red XLU, boom, red XLP, consumer staples, boom, red. What does this mean? It means that the upside is getting minimized. So in the zone, the price action is getting to the upper ends of these zones right now. And remember, not too long ago, all this was red, and we're like, okay, be careful here, and this is where the price actions start to consolidate, and we discussed that. But now what I'm showing you is defensive sectors are getting up towards the red, whereas everything else has kind of backed off a little bit. So if we do get to see some sort of a rally, it could simply just be because the defensive sectors are going to take a little bit of a back seat, a little bit of a breather, where the other, consumer staples, something like consumer discretionary. We talked about Tesla, potentially even technology is going to get a little bit of a bounce, and then they're going to kind of just reset themselves. So that is a possibility that I'm looking at. Another big thing that I'm kind of keeping a close eye on is that VIX. The VIX is still at the lower end of its range, and this thing has been kind of just very oddly correlated to the S&P 500 moving down and down. So it has me a little bit on edge, but I'm going to talk more about that on tomorrow's episode, where I'm going to be looking at front month versus back month and kind of giving you an estimate of what to expect there. That's all I got for you on today's episode, everybody. Here's the Patreon. It's $9 a month if you want to get some trade ideas, get access to these zones. I give a lot more than that. All my stock market indicators, and then you get access to obviously the community. You got to have Discord in order to see anything. And once you sign up for Patreon, you sync your Discord, and then you get access to all the stuff through the Discord. That's all I got for you, everybody. See you later.